Hi, I'm Marco Schwarz, and in this video I will show you how to optimize a basic trading algorithm for stocks. So this algorithm is based on moving averages, so we'll see how to automatically find the best moving averages to really boost the profits of this algorithm. So what we'll see in the video is first how it actually looks like on one given stock. Then we'll see how the algorithm is performing just by randomly setting some parameters. After that, we'll see how to actually automatically find the best moving averages and see how much we can actually boost those profits. So right now, what we'll do is just move over to my computer and I will show you how it's all done and we'll see how to optimize our basic algorithm. All right, so as I mentioned before, we will use a simple moving average algorithm for this video here. So I don't want to get into the detail because I already did other videos about that, so make sure to check that. I also put the links just below this video, so you can actually check my other videos and contents about the moving average method. Basically, I will show you on this simple script. So I use the McDonald's stock here just as an example, and what I will do is plot two averages, right? A short average, so using only the 10 last values here, and more like a long-term average using the 50 past days in the McDonald's stock. So what we'll do is plot everything on a single graph, and I will show you really quickly how the algorithm I'm using here actually works. So we'll go into the console and I will actually launch this file here. So you can see here that the McDonald's stock price over the last 5 years. And what you see in orange is the short-term average, and in green you have the longer term average. So the algorithm is very simple. It says that whenever you have a crossing, we do something. So if the orange line goes like this, cross over the green one, we actually sell. If that's the other way around, we actually buy the stock, right? Very simple. The thing is, well, how do you actually find those parameters, right? Because the algorithm has two parameters. How many samples we take for the short-term average, how many samples we take for the long-term average. Of course, we do add more parameters. I will say a bit about that in the end of the video, but here we'll just take those two. Let's see what it actually gives, right, in the actual algorithm. So here I have a longer file where I actually built this algorithm that I told you about before. So basically, whenever there is a crossing, we do something. That's in this part here. And at the end, I just evaluate how much money I would have made over those 5 years using a given number of shares, right? It was just 100 shares here of McDonald's. And I plot everything on the graph. So I plot the actual price, I plot when I bought or sold the stock, and those two averages. So here I just put some random values. So short-term average of 10, right? 10 samples, 10 days of short-term averaging, and 100 of long-term averaging. So let's just see what this actually gives us. So go back to terminal. This file is called tradingalg.python. So I'll just start it. And that's the graph. So you can see in green, it actually, let me check. In green, it actually bought the stock. And in red, it actually sold it. You can definitely see already some losing trades on this one, right? Just here. So definitely not the best, but still we can see that over 5 years, with a capital of about 10,000, we actually made 5,000 in profit, right? That's what it is. So let's see now if we can improve that, right? So how do we actually improve that? That's what I want to show you really in this video. Because of course I could try to change those values that I have here by hand, right? I could just go back into my file and just modify that by hand, but this will take me a long time because there is a lot of different parameters that we can try. So here I made a simple algorithm to actually find these best parameters for this very simple algorithm. So here what I do is simply do a sweep between those two parameters. It's very basic. That's not the best way to do it probably, because if you have a lot more parameters, a lot more data points, it will take a long time to actually find those two parameters. But here, I don't have that many data points, so just 5 years of stock with a daily precision. So definitely I can do something like this. So I will just sweep from 5 to 30 samples for the short-term average and from 40 to 300 for the long-term average. And at every point, I will actually evaluate how much profits I made. So here, before we actually execute this code, I wanted to mention something that's very important, and that's one mistake I made when I actually started trading stocks or do every type of actual optimization, for example. If you actually take all the data that you have to optimize, right? That's great, but you will have found the best solution for this specific period, right? You can't really be sure that this will work as well on another set of data. That's why you need to separate your data always. So here I take 70% of my data to add as like a training set. And then I take the rest to add as a test set. And at every step of this sweep, I actually evaluate my algorithm, well, first on the training set, and then as well on the test set. And I want to see if I actually made profits, right, on both. And only if, when I optimize on one and it actually also works on the other one, I actually save it and I say, okay, that's my new best values for this algorithm. So that's really important, because you can really end up with some super optimized algorithm parameters that really work well on your data, but then just do terrible on actual new data. So that's why we are doing this here. So let's actually try it out. So we'll do that, we'll execute this code, and it should basically sweep over all those parameters and then only save the best short average and long average number of samples that we can then use in our algorithm. So let's type Python find average. So there are a lot of parameters, so it might take a little while to actually run. So you can see here it actually already found some best values, and at the end this is what this algorithm find to be the best values for our problem here. So let's try them out. So 19 and 57. So now I go back into my algorithm file and I just put 19 and 57. So let's see what we have. So before we add again profits of 5,300. So now Python, again, training algorithm. And let's see the results. So now I have profits of 16, nearly 17,000. So by doing simple optimization of the algorithm, right, automated, because I definitely didn't want to find those values by hand, I more than tripled my profits, right? I went from 5,400 to 17,000 of profits. And again, this is a very simple algorithm. I could have added more parameters, especially if you want to go further. You can really play on things like adding some other type of averages. This is a simple average, right? You can add something like exponential averages and then also add that as a parameter of your algorithm and then run the same type of optimization. So there's really a lot more you can do. But I just wanted to show you that a simple sweep of those two parameters can really lead to here 3 times more profits at the end when running this simple algorithm. Alright, so this is already the end of this video. I really hope that you enjoyed it. So if you want to learn more, for example, find the code that I showed in the video, make sure to follow the link that I just placed under the video. This will lead you to my website where I have a detailed article about what you saw in the video and also the link to the code. So if you want to learn more as well, if you have any questions about what I talked about in the video, make sure to leave that in the comments just below the video. That being said, thank you again so much for watching this video, and I will see you in the next one.